2363 for Reliance. Dipan Mehta, just when everybody gets excited that it will be only Vimal, it never works, right? 10 days ago, everyone thought only Vimal, Reliance time in the sun has come and the stocks come tumbling down.
Yeah, Nikunj, good afternoon. Thank you for having me on your show. There are no real reasons why Reliance should go up or down by 1 or 2% or so. There are no developments that I'm aware of. And these are just technical considerations, fund-based buying, selling, which comes into play. And we should not read too much into it. I think by and large, the company is following through excellently on its strategies and plans. And the only real question in my mind and that of the investors is the value unlocking process which may emerge now that there are three solid businesses within one entity. And not all investors want to buy into all the three businesses. So how are they going to split the company, or will Reliance become a holding company by doing IPOs in the other, the retail and Reliance Jio? So that remains the biggest question at this point of time. But other than that, I think they are just it's just business as usual over there. There are some investor concerns about again debt going back in the company, but we have seen how Reliance management handles debt through equity dilutions in the emerging businesses, and that particular path is well trodden, and they can certainly follow it up for some of the other nascent businesses which they are developing within the group entities.
So, Dipan, would you make Reliance as a portfolio stock for the next 3 years? I mean, 5-8, the weightage is 10% in the Nifty. Would you like to allocate similar kind of a weightage and make it as an anchor portfolio stock for next 3 years?
See, Nikunj, as a general rule in our portfolio, our preference is for mid-cap stocks, where we can get growth of at least 20-25% on the earnings per share and hope that the stock price also goes up by 20-25% or so. So that's how you try and target to double your portfolio. But for a safe investor looking at trying to just match the benchmark, you cannot really avoid Reliance Industries. If you are expecting returns in line with the Nifty Sensex, then you need to have a sizable portion, maybe more than 10% of your holdings in a company like Reliance, because I do feel that on a 3 to 5 year basis, you may see Reliance outperforming the benchmarks, given that we are quite negative on commodities and some of the other companies within the Nifty and the Sensex. So the simple answer is yes, but my personal preference is for small, mid-sized companies which give an opportunity to create wealth, hopefully if they become multi-baggers.
Okay, that's the word coming in on Reliance Industries, 2362. That's 2% shaved off in trade today. Meantime, Dipan, just curious about your take on the entire auto space. It is being weighed under pressure, but what is it that you believe could be the next catalyst or next trigger for the auto sector as a whole? What's your expectation in terms of numbers?
See, I think already a catalyst and a trigger is in play, which is why we've seen auto outperforming for the past few months or so. We are seeing good pent-up demand came into play. Then we saw the trend of rising average realization prices for the sector as a whole because of premiumization. We've seen volumes come back very strong because of increased transportation needs, as well as overall, I think the new models have excited a whole host of new generation consumers and customers. And the auto industry volumes really have gone nowhere for the past 10 years compared to the GDP growth rates. The actual volumes on a 10-year basis compound have been much lower. I don't have the number exactly, but I don't remember this fact. And it's but natural that we are seeing an upcycle in the auto industry. More or less, the margins are maintained or going to improve because input costs have come under control and operating leverage will come into play. And this is a good sector to be invested in if you are particularly positive on rising consumer spend. So keeping all of that in mind, we want to be overweight in autos, but preference is for four-wheelers, be it commercial vehicles or even passenger vehicles, and want to be a little bit underweight as far as traditional two-wheeler companies are concerned. But then again, we are quite optimistic on Eicher Motors prospects.
All right. Meantime, just want to pull up some buzzers as well in today's trading session. On the upside, you've got something like a REITs that is managing to hold out in an otherwise fairly tempered market. Within the Nifty 500 as well, Some of the other stocks that are managing to buck the general trend include a Sequence Scientific. You've got a Jindal Saw as well, that's a buzz, and Rail Vikas Nigam is active. But Mastech, Dixon, those are some of the stocks within the mid-cap space that continue to be weighed under pressure. Naresh, let's get in a take on Mastech on the charts and what you are advising on a rights.
So Mastech is making a bottoming out formation as of now, but would have more confirmation once it can sustain above the 1850 mark. We are still quite a bit away from that price point, but it's made a double bottom around 1540, 1550 levels. So looks interesting. There could be a bounce back trade, but as of now, would wait on it. Rights, on the other hand, is something which looks very promising. The stock had this huge move from 300 to 430 levels, did a retest of 300, 310 zones, and now is starting to make a fresh move. The recent swing high for the last 3 months was around 365. Today it has crossed about 365 mark. Any dips back to 365 to 360 zone would be a buying opportunity. And I would be bullish on it and eventually expect it to cross into a new all-time high again as well.
Just scouting some of the other names, Tata Steel definitely is, springing up in trade. There's a Bharti as well, which is higher by 1% or so. Delta Corp, Shriram Finance, Manappuram, SBI, SBI Cards that is, not SBI. It's an unusual list of winners out there as we see right now. Manappuram reminds me, Kunal, you track the charts of gold as well. Haven't tracked that one in a while. What's happening with gold? Still at highs?
No, I think it's come off quite well. So I think from 59,500 we hit that level on gold on rupee terms. I think we are somewhere around 54,800, 55,000 on gold. The correction is more sharper on silver because I think that asset class has corrected from almost 72,000 to now 61,500. So it seems to be more of a corrective way for both gold and silver, and I think the correction has also panned out more on the global charts for gold, silver. So maybe this could be a phase where the commodity cycle, especially the bullion cycle, is getting into a corrective phase. So maybe another correction of 4-5% for the near-term charts for gold and silver.
Dipan, as we unwind this financial year, now soon the template will be from FY23 to FY24, which is come earnings season, we'll start talking about FY24 and FY25 guidance. What do you think is the market positioning ahead of earnings season? Because that in a sense will determine at least the next 5-7% move on benchmark indices, what we hear and what companies indicate.
Yeah, Nikunj, but it's a bit premature. I think let this particular financial year and month get over, and then we'll have hopefully some advance estimates do come from companies from time to time as to how the month has gone by, especially momentum indicator from the auto industry, GST collections, and some other retail players also give out what their performance has been for the past quarter. So that will set the tone for the earnings, and then immediately by the around 10th or thereafter middle of April, we will start to get the software company numbers as well. My expectation is that it will be a decent quarter, especially banks. I think should do exceptionally well, and we need to see further confirmation how the IT players are dealing with the sort of expected cuts in IT spend because of global headwinds. And as I said, I think very positive on certain consumption-related sectors like auto, real estate, hospitality, healthcare. I think these are the ones that should give out decent set of numbers and keep up with the momentum which we saw in Q3. By and large, I don't think that the earnings season will be a dampener, and we could see maybe a few more ideas emerging from the earnings season, and may perhaps if things go well, trigger a move or a breakout from this very narrow trading range we've seen for the past several months.
Well, Indian Hotels is marching towards a new high. It's one of those stocks which has mesmerized everybody with the ability to charge commanding rates. You've got HDFC Bank. Now, here's a programming reminder. HDFC Bank tomorrow, first interview of the CFO, first television interview of the CFO ever. And it's not like the first interview after the NCLT approval, no. First interview of the CFO on television ever. And that's something which we would be playing tomorrow the whole day. So that is something where you want to just keep your keep your appointment with us, because HDFC Bank is now really firing all cylinders in terms of growth, CASA, technology. and also where they're projecting the company to move now. So Dipan, in this lull market or dull market or lackluster market or momentumless market, how are you keeping yourself busy? Where are you buying? What are you doing?
Actually keeping ourselves busy by traveling, and I've had a few holidays and going on another holiday end of this month as well. I think sometimes it's better to do absolutely nothing in the market. The inactivity, kind of recharges you, and we are kind of waiting for the next earnings season to start. Typically, as long-term investors, we want to have a complete view of the company management commentary, see what the quarter has been before we make any fresh purchases. And that has paid off very well in the past. So I think we'll follow the same strategy. We'll wait for the earnings season to start, analyze the company results in detail, go for the con calls, and then come up with a new set of ideas, if at all. Other than that, I think portfolio which is broadly into auto, banks, select technology, consumption-oriented stocks, some of the profit-making platform companies, I think that's doing pretty much fine. And what we are seeing is that prices have gone nowhere for a lot of stocks last, say, 6 to 12 months or so. But time has lapsed, earnings trajectory has remained more or less stable. And price to earnings multiple have certainly got compressed in our portfolios and what we see for other clients and the market as a whole. And there's only so much of P compression which can take place. And once we have some kind of a handle on when the rising interest rate scenario will come to an end, then you will see an inflection point for the markets. And we are patiently waiting for that inflection point where this entire P compression starts to get reversed and we have P expansion, which will be in line with when the interest rates have peaked out and start to decline.
Dipan, would you chance your arm at Poonawalla Finance? I mean, now they have the ability to scale up. With the Poonawalla brand, their cost of borrowing, which is like the bedrock or the bloodline for any lender, that could be amazingly better. They could command rates in the wholesale market from where they borrow, which could be in lines with what the Bajaj Finance and the Tatas of the world command, because they've become a Poonawalla company now.
Well, that assessment is fine, but Magma FinCorp got into a lot of trouble when the NBFC crisis took place, and to the extent that they had to undergo change of ownership as well. And we are getting into a situation where liquidity is going to get tight for NBFCs, and banks are offering higher and higher interest rates. And my preference is for banks which have got very strong CASA. I'm a bit cautious when it comes to NBFCs. There's especially more cautious when it comes to NBFCs which have not weathered the NBFC storm post ILFS crisis. I'm very skeptical of those companies. So within the NBFC space, three companies which come to mind which really manage their operations well despite ILFS crisis and despite the pandemic are Bajaj Finance, Cholamandalam, and Sundaram Finance. And these are the only three companies which I have my faith in. Of course, HDFC is in a class apart, but that's getting merged into the bank. So there are only three NBFC that we are really looking at or tracking. And then we have all the banks, mid-size, large-size. I think they're far better placed this time around than the NBFCs. And Poonawalla FinCorp has been a star performer, no doubt about that. But now it's quite expensive as well. And we need to see how the new management is really able to deliver and how they're going to manage their book when the going gets really tough for the NBFCs on the NPA front or even in terms of raising resources.
Kunal, on the charts of Bajaj Finance, we were talking about the underperformance as well here, right?
Yeah, I think yesterday we were talking about that how the markets were doing pretty well, but Bajaj Finance and Finserv had underperformed. Today is a more of a follow-through price action for the stock on the downside. So this indicates clear weakness, clear shorting, which is happening for the stock, because on a day when the markets were doing quite okay, the stock underperformed, and on a day when the markets are struggling, the stock has continued to underperform and show signs of weakness. So this could probably indicate that the stock may now go back into retesting the previous lows. I think 57.50 was the previous low for Bajaj Finance. The stock had hit in the month of February. So I think those levels could be retested, and similar levels on the downside for Bajaj Finserv, just around that 1300 odd mark.
All right, let's get in those BTST trades as well, as we're just about a few minutes towards wrapping up today's trading session. Naresh, what's looking good on the charts?
So looking at first as a buy on Oil India, which has been doing well over the last few days. Strong momentum here, a stop loss at 265 and a target price of 290 in the short to medium term. Second is a buy on Axis Bank, which has shown relative strength in the banking space, a stop loss at 865 and a target price of 885.
Let's get in your BTST call.
I'll go with a couple of sell names over here. The first one is a sell on BHEL. The stock entering into the overbought territories on the indicators around the 78 odd mark. So targets of 75, stop loss to be kept at 80. And the second will be a sell on Manappuram Finance. Again, this stock has entered into a deep overbought territory at current levels of 117 approximately. So would suggest a sell with targets of 114, stop loss 119.
All right, there you have it. That's the view coming in on some BTST trades, Axis Bank and Manappuram Finance that our chartists are flagging off. Meantime, Dipan, what's looking good within the entire defense space, given that this sector had seen quite a bit of traction? Is the worst now or is the best already priced in?
No, I wouldn't say that, because there's so much of earning visibility for these companies and the order books also are gradually increasing, and then there's the entire export opportunity as well. And because of overall general market trends, we are seeing that these stocks have gone sideways and have seen mild correction. But by and large, I think this is a 2-3 year type of a story, the PSU defense and some of the other defense stocks as well. And I would continue to remain invested. The usual disclosure we and our clients are invested. We've got some small holding in Bharat Electronics and HAL. So I think that's the one that we track. But there are many, I think the Indian shipbuilders also like Mazagon Docks, Garden Reach also are at attractive valuations considering the kind of order book position which they have. But one needs to be a bit patient in the sector, and you should expect some earnings volatility because the nature of business is such that it's like a project business. So the quarters in which they have higher deliveries or higher completion of work, that is when you will see the surge in top line and bottom line. But you could have a few soft quarters as well. But that doesn't mean that the overall dynamics of the business or the prospects are diminished in any form. So very positive on most defense companies. I think you can buy them as a basket or even 2 or 3, the ones which I named. I think they all should do pretty well going forward.
Right. Okay, Dipan, great to have you on the show. We'll let you go on that note. Good to get in your thoughts as always.